You've been paying car insurance for 10 years. Never had an accident, never filed a claim. You've paid $15,000 in premiums. Then one day someone rear-ends you. Not your fault. Clear-cut case. You file a claim, and your insurance company raises your rates by 40%. You didn't do anything wrong. You paid faithfully for a decade. But now, you're being punished for using the service you paid for. This isn't a bug in the system. This is the system. The insurance industry is a $1.4 trillion scam designed to take your money and give back as little as possible. And in the next 15 minutes, I'm going to show you exactly how they're stealing from you, why it's completely legal, and what you can do to stop getting ripped off. Because the moment you understand how insurance really works, you'll never look at your premiums the same way again. Let me explain the theory of insurance because most people think they understand it but actually don't. Insurance is supposed to be risk pooling. Everyone pays a little bit so that when someone has a catastrophe, there's money to cover it. You pay $100 a month. And if your house burns down, the insurance company pays $300,000 to rebuild it. Simple. Fair. Collective protection. That's the theory. Here's the reality. Insurance companies are not in the business of paying claims. They're in the business of collecting premiums and denying claims. Every dollar they pay out in claims is a dollar less in profit. So they've built an entire industry around taking your money and finding reasons not to give it back. Let me give you some numbers that'll blow your mind. Health insurance companies deny about 20% of all claims. 1 in 5. You pay your premiums every month, you get sick, you need treatment, and they just say no. They deny coverage for treatments they're supposed to cover. And here's the kicker. Even when they're legally required to pay, they still deny first, because they know most people won't fight it. Most people will either pay out of pocket or just give up. Home insurance is even worse. After a natural disaster, insurance companies send adjusters whose entire job is to lowball your damage estimate. Your house has $100,000 in damage, car insurance. They've perfected the art of raising your rates for things that aren't your fault. Accident you didn't cause, rate goes up. Hailstorm damages your car. Rate goes up. Zip code has higher claims. Rate goes up. You're paying for a service that actively works against you the moment you try to use it. Now here's the really insidious part. They make the claims process so complicated and frustrating that you're incentivized to never file a claim. Ever had a small accident and thought, I'm just going to pay out of pocket because if I file a claim, my rates will go up more than the repair costs? That's by design. They've trained you to not use the insurance you're paying for. Let's break down the specific tactics insurance companies use to rip you off. Scam number 1, the pre-existing condition game. Health insurance companies love this one. You have a condition before you got insurance, they won't cover it. Fine, that makes sense in theory, but they take it further. You have diabetes. You get in a car accident and break your leg. They try to deny the claim because your diabetes is a pre-existing condition that contributed to the severity of your injuries. Your diabetes didn't break your leg. But they'll try anything to avoid paying. Scam number 2, the out-of-network surprise. You go to a hospital that's in your insurance network. You get treated. Then you get a bill for $20,000. Why? Because the anesthesiologist who worked on you wasn't in network. You had no choice who the anesthesiologist was. You were unconscious. But now you're stuck with a massive bill. Insurance companies know this happens. They could fix it. They don't because it saves them money. Scam number 3, the totaled car lowball. Your car gets totaled. Insurance says they'll pay you market value. Sounds fair? But they define market value as the lowest possible comparable sale they can find. Your car is worth $15,000. They find one similar car that sold for $11,000 in a different state with higher mileage and accident history. Now that's your market value. You can fight it. But that takes time, energy, and knowledge most people don't have. So you take the lowball offer. Scam number 4, the premium creep. Every year, your rates go up. Not because you did anything wrong, just because insurance companies call it adjusting for risk. But here's the truth. Your risk didn't change. Their profit targets did. They raise rates a little bit every year, betting you won't shop around. Most people don't, because switching insurance is a hassle, so you just keep paying more. Over 10 years, you could be paying 50% more for the exact same coverage. Scam number 5, the claim delay tactic. You file a legitimate claim. Instead of paying it immediately, they drag it out. They ask for more documentation. They schedule multiple inspections. They review your claim for months. Why? Because the longer they hold your money, the more interest they earn. And they hoping you'll get desperate and accept a lower settlement just to get it over with. Time is money. They're using your time to make money. Now, I know what you're thinking. Isn't this illegal? Aren't there regulations? Yes, there are regulations. And insurance companies violate them constantly because the fines are cheaper than paying legitimate claims. In 2022, insurance companies paid over $10 billion in fines and penalties for fraudulent practices. That sounds like a lot. But they made $1.4 trillion in revenue. The fines are just the cost of doing business. If this is making you angry, good. You should be angry. And if you know someone who's getting screwed by their insurance, share this video with them. Because the more people who understand this scam, the harder it becomes for them to get away with it. And hit that subscribe button because I've got a lot more to expose about how these industries are robbing you blind. So how did we end up with an insurance system that's fundamentally designed to screw over the people it's supposed to protect? It starts with a basic misalignment of incentives. You want your insurance to cover you when something goes wrong? The insurance company wants to maximize profit. Those two goals are in direct conflict. Every claim paid reduces their profit margin, so they're incentivized to deny claims, delay payments, and raise premiums. Now, in a normal market, competition would fix this. If one insurance company treats customers terribly, people would switch to a competitor. But the insurance market isn't normal. It's rigged. First, information asymmetry. Insurance policies are deliberately written in complicated legal language. You have no idea what's actually covered until you try to file a claim. By then, it's too late. You can't comparison shop effectively because you don't know what you're buying. Second, regulatory capture. The people who regulate insurance companies used to work for insurance companies, and when they leave government, they go back to working for insurance companies. The regulations are written by the industry, for the industry. Third, mandatory insurance. For car insurance, health insurance under the Affordable Care Act, and in some cases home insurance, if you have a mortgage, you're legally required to have insurance. When something is mandatory, companies don't have to compete on quality, they just have to exist. You have to buy it whether it's good or not. Fourth, claim denial incentives. Insurance adjusters, the people who approve or deny your claims, are often paid based on how much money they save the company. Deny a claim? Bonus? Lowball a settlement? Promotion? Their personal financial success is tied to making sure you don't get paid. Fifth, the lobbying machine. Insurance companies spend hundreds of millions of dollars on lobbying every year. They write legislation. They fund political campaigns. They make sure the system stays rigged in their favor. Any attempt to reform the insurance industry gets crushed by their political power. Let me give you a specific example. After Hurricane Katrina, thousands of people had flood damage. They paid for flood insurance. They should have been covered. But insurance companies found a loophole. They argued that wind damage happened before flood damage, and wind isn't covered under flood insurance. Thousands of legitimate claims were denied. People fought back. Lawsuits were filed. Some won. But most people gave up because the legal battle cost more than their claim was worth. The insurance companies knew this. They factored it into their business model. And here's what really makes me sick. While they're denying claims from hurricane victims, insurance company CEOs are making tens of millions of dollars a year. The CEO of United Health Group made $142 million in 1 year. Cigna's CEO made $91 million. These are health insurance companies. They make their money by denying sick people coverage. Let that sink in. Let's talk about what insurance actually costs you over your lifetime, because most people don't realize how much they're really paying. Let's say you're 25 years old. You're going to live to 80. That's 55 years of paying insurance premiums. Car insurance, average $150 a month. Over 55 years, that's $99,000. Health insurance, average $450 a month for an individual. Over 55 years, that's $297,000, and that doesn't include deductibles, copays, or out-of-pocket expenses. Home insurance, average $125 a month. Over 40 years of home ownership, That's $60,000. Life insurance, average $50 a month. Now here's the question. Are you getting $480,000 worth of value? For most people, the answer is no. Most people will pay far more in premiums than they'll ever receive in claims. That's how insurance companies make profit. They collect more than they pay out. But here's where it gets even worse. Because of deductibles and rate increases, you're incentivized to not file small claims. Your deductible is $1,000. You have $1,500 in damage. Technically, your insurance would cover $500. But if you file the claim, your rates go up by $300 a year for the next 5 years, so you pay the $1,500 out of pocket to avoid the rate increase. You're paying for insurance and paying for repairs, double dipping into your wallet. And this doesn't even account for the mental and emotional cost of dealing with insurance companies, the hours spent on hold, the stress of fighting denied claims, the anxiety of wondering if you're actually covered. Insurance is supposed to give you peace of mind. Instead, it's a constant source of financial stress. Before we get to solutions, I want to hear from you. What's your worst insurance story? Have you had a claim denied? Have your rates gone up for no reason? Drop it in the comments. Let's expose these practices together. All right, let's talk about what you can actually do to protect yourself from the insurance industry scam. First, understand that insurance is for catastrophic events only, not everyday expenses. Don't think of insurance as something that covers every little thing. Think of it as protection against financial ruin. High deductible, low premium. Cover the small stuff yourself. Only file claims for major events. Second, shop around religiously. Every single year, get quotes from at least 3 different companies. Insurance companies count on you being lazy. Prove them wrong. Switching can save you thousands. Third, document everything. When you file a claim, take photos, videos, keep receipts, get written estimates. The more evidence you have, the harder it is for them to deny or lowball you. And save all your correspondence, emails, letters, recorded phone calls. If they promise something verbally, get it in writing. Fourth, read your policy. You're a man. I know it's boring. I know it's complicated. Do it anyway. You need to know what's covered and what's not. Don't wait until you file a claim to find out you're not covered. Fifth, fight denials. Insurance companies deny claims, hoping you'll give up. Don't file an appeal. Contact your state insurance commissioner. Leave reviews. Make noise. They're counting on you to be quiet. When you fight, you often win, but only if you actually fight. Sixth, consider self-insurance for some things. If you have enough savings, you might not need certain types of insurance. For example, if you have a paid-off car worth $5,000, do you really need comprehensive coverage? Just liability to protect others? Save the premium. Build an emergency fund specifically for self-insurance. Over time, you'll save money. Seventh, use a broker, not the insurance company directly. Brokers work for you, not the insurance company. They can shop multiple companies and find you better deals. Yes, they get a commission, but they have an incentive to keep you happy, so you don't leave. Eighth, bundle carefully. Insurance companies offer discounts for bundling home and auto. Sometimes bundling costs more than separate policies from different companies. Do the math. Don't assume bundling is cheaper. Ninth, improve your risk profile. Take defensive driving courses. Install security systems. Maintain good credit. Stop smoking. Insurance is based on risk. Lower your risk. Lower your premiums. And 10th, vote with your wallet and your vote. Support companies that treat customers fairly. Leave reviews. Tell people about bad experiences. And politically support insurance reform. More transparency. Faster claim processing. Penalties for bad faith denials. The system won't change unless we demand it. Insurance industry is a $1.4 trillion scam built on taking your money and finding excuses not to give it back. But you're not powerless. You can shop around. You can fight denials. You can self-insure where it makes sense. You can demand better. Insurance companies have spent decades training you to accept getting ripped off. It's time to stop accepting it. If this video opened your eyes, share it. Send it to your family, your friends, anyone who's paying for insurance and getting screwed. Subscribe for more content like this. I'm going to keep exposing the systems that are designed to take your money, Turn on notifications, because the next video might save you thousands of dollars. The insurance industry is counting on you staying ignorant. Let's prove them wrong. Thanks for watching. I'll see you in the next one.